Hi, everyone. This is Emily Platt with the Wellspire Investment Team. Given the ongoing discussions about the Federal Reserve's pursuit of a soft landing and the anticipation of potential rate cuts in 2024, we thought we'd delve into the latest data on services inflation. This component is vital to the Consumer Price Index, or CPI, which tracks the monthly change in price paid by U.S. consumers and plays a significant role in the Fed's economic policy decisions. Recent insights from the ISM Services PMI report on business prices reveals noticeable increases in service costs, a trend that contributes to sustained inflation levels. This includes sectors like auto insurance, medical care, and hospital services, which surged 1.6%, marking the most significant rise since October of 2015. Although it's still early, data indicates that businesses are experiencing rising costs in their day-to-day operations after 2 years of consecutive declines. The most recent month-over-month data, represented by the tall orange bar on the chart here, is particularly striking, and we're interested to see whether this trend will persist or if it's merely short-term fluctuation. This development warrants attention as the index has historically been a reliable forecaster of broader inflationary trends. Services costs play a critical role in the overall inflation picture. For instance, in January, services inflation contributed approximately 3.1% to the total 3.4% CPI figure. This underscores the significance of service sector in achieving the Fed's long-term inflation target of 2%, and reducing inflation effectively necessitates a focus on service prices. Fed leaders are well versed in economic history, which informs their approach to managing inflation. Historical instances of inflation has shown it to occur in waves, with recessions often acting as a reset for economic cycle. This reset can help address ingrained inflation expectations that influence consumer behavior and perpetuate inflation. Currently, we haven't entered a recession, and the Fed's goal is to achieve a soft landing. While there's optimism about the progress in reducing inflation, the Fed seeks more evidence to be confident that inflation is on a sustainable path back to the 2% target. As we move forward, it's important to keep in mind that discussions about inflation may not be over just yet. With that, thank you for listening to this month's Markets in 2 Minutes.